This is Robert Kraft, and I'm your host for SNN.Network. And joining me today is a good friend of the program. Had him on a few times now, both on the podcast and also as a Wall Street View, Mr. Mark Tobin. He is the founder and editor of Coffee MicroCaps. Mark, great to see you as always, man. And thanks for joining me at this early hour where you are.
Yeah, no problem, Bobby. Good to be back on again.
It's great to have you back. So the main reason I had you back on is, look, we've been going, well, hold on. First things first, how are you guys holding up? Everybody okay? How's the family? Everyone all right?
Yeah, everyone is good. We're on week 5, or we've just completed 5 weeks of like a hard lockdown where we are here. And they're easing back a little bit from tomorrow. But for all intents and purposes, still going to be working from home.
Right, because you're in Ireland right now, right? Or in South Africa?
South Africa.
You are in South Africa, okay. Yeah. So I mean, has it hit it there bad at all, or?
No, definitely not as bad. I mean, definitely not as bad as parts of California and obviously New York. They went pretty hard and fast ahead here. We went full kind of national lockdown 5 weeks ago. So they're on, I think, about, to give you, I guess, comparison, they're on about just over 5,000 cases now, and deaths I think are maybe like 100 people at this stage. And as I say, they're easing up from tomorrow. Certain restrictions, certain industries going back to work, and kind of a gradual reopening in the economy, but they're still keeping a very tight rein on people's movements and what you can do, what you can't do. So they're taking it very, very seriously, which is good, because we can see when this thing gets out of hand from various places, whether it's Italy, Spain. My brother-in-law actually lives in Barcelona, and even in New York. If it does get out of hand, it can get like quite scary for everyone.
Yeah, no, absolutely. Well, I'm hoping for a swift end. I think we all are, and hopefully we get a vaccine or treatment relatively soon. But the main reason I did bring you on here is, you're my guy when I talk about Australia, and the ASX and just microcap universe in general happening down there. And you actually sent me this great article titled ASX Microcap Madness March 2020. I told you needed to retitle it for the American audience for it to be March Madness 2020. But again, for next year, right? For the 2021 letter, right? So, exactly. so tell me a little bit about the thesis here, and we'll go from there.
Yeah. I guess it was just I wanted to do something on the volatility that we saw in March. So this haircut is not like a home haircut. This is from me like pulling my hair out like over the last like 2 months with the like crazy volatility that's happened in Australia. So just to give you an overview of like what's happened. So March was the worst ever month for the emerging companies index, which is the like microcap index in Australia. So it's down, just over 31% in March. Now, we just followed that up in April. The index was up 27.8%, its best ever month. So March was its worst ever month, and April was its best ever month since the index started, which was 1st of January 2004. So you got kind of 16 years of nearly 200 months in there. Talk about volatility. Worst ever month for the index, best ever month for the index, following straight after. Going back to March Madness, so it's actually from a guy. The methodology comes from a guy called Nick Maguli, who does of dollars and data, where you basically add up all the like index moves. So you just make everything positive, and he works out how far have you traveled basically if you add up all the pluses and minuses. And I went through that, and I kind of looked at it, okay, for the year, even though we're only 3 months in March, for the quarter versus previous quarters, and then monthly. So, I mean, the first quarter for 2020 was equivalent to the October '08 quarter. There's just a slight bit under. So that kind of gave you an idea of, for the quarter at least, we were definitely back to like GFC style volatility. But then when you looked at the individual months within that quarter, when we got to March, it was 30% more volatile. I think 35% more volatile than October 2008, which was the most volatile quarter in that like kind of Q4 2008. So, you know, I said if you thought March was a volatile month for ASX Microcaps, it was the most volatile month since the index began, and by a long, long, long way. And then I also threw in there, I think at the bottom of the article, you know, how did the Australian market compare to other markets? Because, you know, the first thing that people come back, yeah, but March was crazy, you know, everything was down everywhere. Actually, Australia, you know, was much further down than let's say comparative markets. Yeah, it was one of the worst that I could find. You know, most of the US ones were down kind of in the like 20s. The MSCI Global Microcap was down 19. The next closest one that I could find was the UK microcap market. It was down like 26%. But, you know, jump back then up to Australia, it's like minus 31. It's 5% more than the next closest one. So I think, you know, Australian microcaps, you know, whichever way you slice it and dice it, they were down a lot and they were incredibly volatile in March 2020.
So what would, I mean, we've now had a month to kind of digest all of this information and, you know, try and get an understanding. Well, maybe sort of, just because, you know, we've had now another crazy volatile month where it's shot back up, you know. So, I mean, it's pretty easy to say pandemic caused tons of volatility. There's volatility everywhere. But why was Australia hit the hardest, would you say, in terms of this performance?
It's something I'm still trying to figure out, like why it was hit the hardest. And to be honest with you, I haven't got a definitive answer for it, because there wasn't anything, like if I go back to the GFC times, you know, there was a lot of people trading on margin back then. It was like very easy to get margin loans. And it's like, okay, you know, they've got, you know, some couple of large cap names in here that they've, you know, using as collateral, and you know they don't want to sell these because they're like blue chips, so like now they're just like selling these instead of like paying margin calls. You know, that wasn't really the case now. You know, margin lending is, you know, pretty small compared to the global financial crisis back 08, 09. So to give you an honest answer, I don't know why it was so volatile, but maybe in the fullness of time, as you say, we're only another month on, and it's been followed by, you know, why has the market in Australia ripped back so hard in the last month is also now a new question to be answered. So I think we're going to have to wait this one out and get a bit more context, and, you know, step back from a year from now or 6 months from now, maybe we'll have a clearer understanding of, like, you know, why we're seeing, you know, such incredible moves on the Australian market.
Well, okay, so then this is, you know, this leads me to my next question, in that, you know, you actually mentioned this at the end of the article, where as an investor yourself, you know, analyzing the Australian market, you know, you look at companies on a daily basis, ASX traded companies, both operating there in the US, all over the world. So then if, let's say, you know, you're an Australian investor or anybody that's looking at the Australian market, what are some of the things that they should be looking for, or also look out for, in terms of some of these small microcap companies that are trading down there? And just really, how should you really think about it, especially after March and April now?
Yeah. So I think, yeah, there's probably out of March and April, I think there's going to be like some like short-term, short-run effects and some like long-term, long-run effects of it. So I think the short-run ones, I like mentioned in my article, I mean, the baby definitely got thrown out with the bathwater, to use the phrase. And as I said in my article, it's now time to find the baby. And I think a lot of that is going on from like microcap investors that I find. You know, they're throwing the research net far and wide because of the moves, they know that there's definitely stocks out there where the prices have got dislocated from the fundamentals of the stock, and I guess the story or the strategy of the stock. And I think maybe just in our age group, Bobby, of people we talked to, I think, you know, we were either too young, too inexperienced, or too green back in 08, 09, and we like look back at the prices things were trading and we're like, oh my God, like, I should have taken advantage. And there's a lot of that talk that, this might be a once in a multi-year time frame that you have a chance to kind of, really get into something that might turn into a 5 or 10 bagger down the line. So people are looking for those entry points now. I think that's some of the like short run stuff that's happening. Obviously a lot of capital raisings going on. So like people are trying to work out like about taking advantage of those. I think the window has closed a bit because of the ramp up in April, but by and large on the stocks that I've looked at, they're still trading slightly below where they were April a year ago. But let's say, the business models have moved on since then. They might, be a bit more established. On the long run effects, though, I think there's definitely going to be what I call a pandemic premium is going to come into the market. So companies that have like kind of sailed through this period in terms of operationally, because their customers are not affected, their revenue is not affected, the story is definitely attacked. I think they're going to attract a new premium that previously didn't exist anywhere in the market before. So I think that pandemic premium is going to over time get inbuilt into prices. Similarly, I think on the flip side of that, you're going to get what I'm calling a disease discount, where now there's going to be a reassessment of, oh no, this is like a good secure business, but actually in a COVID-19 world it's not working at all. And you can even start at the top level at sectors and say, okay, healthcare has like been totally unaffected by this because it's like an essential service. Well, actually, if you drill down into some of them, let's say like a company that's involved with like day hospitals, where it's like kind of elective procedures. I mean, they're basically shut down now. And you would have thought, oh, hospitals, healthcare, it's like, a really defensive industry. But even within healthcare, there's companies that have been badly exposed to COVID-19 shutdowns where you wouldn't have thought of that before. So I think they are now definitely going to trade. So they might have, the healthcare aura over them, but they're definitely going to get a disease discount. Even in technology, people think, oh yeah, you can work remotely. They're not going to be affected. You take something like, any of the like ticketing platforms. There's no events happening, it's so like it's a tech-based business, but their customers' revenue has like and their revenue has like completely disappeared. The same with the guys who do point of sale systems and business information technology for on-premise retailers, and maybe they're clipping the ticket in there as well for the point of sale guys. That there's no revenue passing through the cash registers. So, that's a portion of their revenue that's completely gone. And people would have said, oh, it's a great business. Every time somebody buys something in the shop, they're like getting, 0.1% of it. So I think, that is still to work its way through the market. A new premium based on, I guess, what would you call it? Not being affected by the pandemic, so that premium coming in, but also a new disease discount where they're like, okay, if this flares up again or some similar global health issue flares up again, people won't forget that these companies ended up having zero revenue in April or March or part thereof, or needed to do a highly dilutive capital raising to kind of see them through.
Absolutely. So with that, Mark, where can my audience go and find more information about you and Coffee MicroCaps?
Yeah, I think the best place to find me is on Twitter. I'm fairly active on Twitter, so I'd say Coffee MicroCaps, and the ticker handle or the Twitter handle is C MicroCaps.
I like the ticker handle. So what was that again? What was that again? I hope I didn't interrupt. So it's at C MicroCaps.
At C MicroCaps, yeah.
Got it. All right, dude. Well, thank you so much for doing this. I really appreciate you taking the time to go over this article and what is going on in Australia in the microcap space. I really do appreciate it, and I'm stoked for the next time we get to chat.
Okay. Cheers. Thanks, Bobby.
Cheers.